Hello, everyone. This is General Romulus back from the arena just for a quick minute in the middle of all of our holiday breaks. Absolutely exciting time for an end of the year. Gold running up, silver crashing into records, and the U.S. stock market looking like it's going to close at or near all-time highs. What do you think about that? As always, everything you watch here, well, this is for your educational, perhaps entertainment purposes only. I'm not a stockbroker or an investment advisor, and I do not provide you with any advice for you. Just talking about some ideas that I believe can help us out. Early in my career, and in real life started this business in 1994, over 31 years ago. Oh, the old timers, the salty crusts, the experienced folks would talk about something called the January effect. Perhaps this is something you have never even heard of. The January effect, according to Wikipedia and other trusty sources, is a hypothesis that there is a seasonal anomaly in the financial market where securities prices increase in the month of January more than in any other month. However, we know this not to be the case. Over the previous 42 years, the months of November and April are the most bullish months, December being second and January being third. But the reason January has a nice upward kick to it, at least in the past, was because a lot of investors who bought small cap stocks, and again, the January effect mostly was attributable to smaller companies. They bought small cap stocks, which the Russell 2000 holds 2,000 stocks in it. It's the place, it's the index, it's the area where most U.S. companies are trading. The Dow has 30 stocks, S&P 500, 500, NASDAQ 100, obviously 100 stocks, but most stocks trade in the Russell 2000. They're small companies with market valuations of less than $20 billion. To put that in perspective for you, NVIDIA has a market valuation of about $4.5 trillion, over 100 times, 200 times, 300 times even the average size of what is trading in the Russell 2000. And if you bought a stock in the Russell 2000, a small cap stock, in the month of January, February, March, April, whatever, and it was down, well, you would sell it in December before the end of the year to get that tax loss, and then buy it back in January to get back involved in the stock that you wanted to own. So the January effect really was Russell 2000 stocks, small cap stocks would go down in the fourth quarter and then go up in the first quarter, primarily in the month of January. So what did the smart, savvy investing crowd start doing? Well, they would start buying these stocks in late December with the idea that by the end of January and February, they would be higher as those tax loss sellers got back in. And just like with anything on Wall Street, as soon as you think you have the key, the market changes the lock. There is no January effect anymore. It hasn't been substantial. It hasn't been effective for several years now. But is it possible? Is it even probable that something like that is going on right now in a different part of the market, a different asset class, a different area? Are we seeing the January effect kick over to the crypto world? Will Bitcoin, which has been in a funk, a cold January funk for a long time now, start to warm up and shed this bearish nature? What you are looking at is a weekly chart. So each one of these red and green candles is 1 week of trading in the mightiest of all mighty cryptos, Bitcoin. And much like the S&P 500 is the main barometer for the rest of the global, not just the U.S. stock market, Bitcoin is the bellwether and the barometer and the main thing you want to look at if you really want to understand whatever it is going on in the crypto universe. And up until, look at this, just a few weeks ago, crypto, Bitcoin, trading all the way down at just above 80,000 a coin. That's not too much different than was trading in March of 2024. So we're talking about 20 months ago, same price. There hasn't really been any gains in Bitcoin and the crypto universe for some time, especially considering the type and the level of risk that investors and traders have to take in order to potentially enjoy what could be an upside move. Now, Bitcoin and Ethereum and most cryptocurrencies are right now negative for 2025. They're a little lower than where not much. It's not 30, 40, 50%. They're a couple percentage points below where they were at the beginning of 2025. Now, if you look at a daily chart, we move this to a weekly. You move this back to a daily, and I'm doing this intentionally. Just look at yesterday, for example. Bitcoin and most of the other cryptos start to make a little bit of a run in the morning. And then they spend the rest of the day just getting hit. I mean, that's a bearish hammer right there, actually, in the traditional technical analysis trading world. Bitcoin went right up to its 50-day moving average, a place that it hadn't traded at really at all since going back to mid-late October. And then what happened? It got hit, pulled right back. Ethereum, pretty similar, right up to its 50-day moving average, and then got hit, pulling right back. Why did it pull back? Why can't this run? What is going on? Well, again, January. Perhaps people that are in crypto are selling their cryptos right now, harvesting that tax loss potential that they can utilize against gains that they've had, well, everywhere else. I mean, everywhere else. Well, perhaps except for oil. Oil's down as well. But energy stocks are up. The S&P 500 hit a new all-time high just a couple of trading days ago. Dow Jones right near an all-time high. NASDAQ a little bit off, but not far. You see the 100. Russell 2000 just a week or two away from a new all-time high. Most of the sectors looking the same as well. Gold, all-time high. Bond market, not all-time high, but there are gains for the year throughout most of the yield curve in the bond market. But crypto isn't the case. So perhaps we're looking at something that, well, no one else is really talking about right now. The January effect, which used to belong almost solely to the small cap universe, has, well, for the first time in a while, bled into somewhere that is least expected, and that is the crypto space. Now, there are a lot of now famous stock market investors, analysts, research managers, traders, and even CEOs. For example, we've got Michael Saylor from Strategy. And next week, I'm going to tell a great story about that stock that takes me back to 1999. You guys are going to love that one. But these folks are all talking about a massive Bitcoin run. They thought it was going to start 4 weeks ago in December, right after Thanksgiving. And it hasn't. But they're saying things like Bitcoin at 150, 200, 250,000, Ethereum at 9,000, 15,000 by the end of January. So 33 days from now. That's kind of silly. That's unlikely. For me, I think Bitcoin can hit 150,000 in a year. I think that over the next 20 years, it averages about 16% per year. That's per year. So I want to buy more as it dips for my long-term holdings. And going back to my videos, check one out that I made a couple of weeks ago called How to Make Money in Crypto, Get Free Money. And that is utilizing an ETF in the crypto space. But I do like to trade these cryptos from time to time when they're making runs, which they haven't for a little while. You see, this has been in a consolidated period since the middle of November. So we have about a month and a half, and most of the cryptos look like this as well. And this is not a trading environment. I mean, you could kind of trade the range a little bit, but that's not my thing. I'd rather get in and, get some trend action going through a breakout to the upside or a breakdown to the downside. Buy it, go long, short it, go short, look for a bigger move. That's a little more something that I'm interested in. However, you look at this and it has been stuck in a bit of a trading range. And I'm not interested in buying for a trade. Again, I own long-term, but buying for a trade, unless and until it can break above this upper yellow line, which is about 95,000. And if I'm going short, and there is a way to go short Bitcoin, you can buy BITU, which is an inverse to Bitcoin itself. And it looks like it's a 2-to-1 move. So that's not a bad way to make some money. I'm not looking to go short unless and until it break strongly below this lower white line. And that could lead to $10,000 to $15,000 moves in either direction if and when they break one way or the other. Okay, this is still Bitcoin. We have it on a weekly look. We're only looking at a line chart connecting all the weekly closes. And now we see something that this pattern at least does look bearish. This could either be a bear flag or even a descending triangle. And it's kind of hovering slightly above this white line. If it breaks, then again, a $10,000 to perhaps $15,000 downside move could be pending. And if it breaks above the upper yellow line, well, at that point, we'd begin to have a series of higher highs and higher lows that could lead to somewhere, well, north. Bit of an uptrend and perhaps even something stronger. So if the crypto crazies are right, and if January 2026 is going to be an incredibly bullish time for cryptos and for Bitcoin, then perhaps this January effect really is the situation keeping it in check. Maybe in about 3 or 4 days, the coat gets shed, Bitcoin starts to break down trend lines, starts to get above upper resistance areas, and started a powerful trend to the upside that could be quite interesting for the first few months. If it breaks below that lower white line, however, well, we know what probably will come next. Again, this is General Romulus. Glad to be with you at the very end of 2025. I hope that this year was as good to you, your family, and all your business endeavors as it was to the Romulus Legion. And grateful for all of you watching. Again, I'll be here again next week. Got a great story about strategy and Michael Saylor's stock that has morphed into a Bitcoin treasury company. And also extremely fired up to get fully back in the arena and fighting like mad with all my Centurions throughout all of 2026. Remember, my ultimate objective: consistent returns regardless of market direction. All right, let's see if you have your own January effect. I'm back in my chariot on holiday break. See you soon.